Welcome to TradeTheMBI.com. This is John. This report is for the 8th. Well, we had a little bit of a fade back, and as I pointed out, a more significant one from where we were would be a bigger dip towards the 76%, but the short interest just wasn't there to drive it, and this has all been about buyers and where they're putting their money. And at this particular stage, they're putting it all in gold. So they flipped from treasuries to just making gold the ultimate buy scenario. Even more so than the crypto. So that's been a complete shift, and not surprising. I mean, I keep pointing out exactly why, and I said that 4,000 wasn't a big deal. We were actually headed towards 4,400, and um, pretty clean evidence as to why. It certainly has that inflation protection level that you don't get from treasuries, and there still hasn't been any argument that treasuries are still, subject to inflation. And of course, that narrative still exists. I mean, as much as you don't hear about it as much, there's still the broad belief within the Fed and elsewhere, they keep saying it, that they think that the tariff situation is inflationary. And even though it hasn't produced anything in a year, it still has to happen at some point. It just must. Um, at what point do they actually recognize their numbers wrong? I don't think ever, because they're a firm believer in their model, and that's the only model they have. So to not accept that would be to have their model break, and they're just not willing to do that. And we can see now, this is where it gets problematic. Okay, so you're 1185, now you're down to 1184. We were rising, so this has got to make an improvement on today. Otherwise, you got a problem, because now you end up with lower histogram reading, a meaning of gold, azure, potentially even blue. So maybe another couple days off that. That points to weakness. It's just the way it's happened. So you're going to need some kind of build. That new fund money hasn't really transitioned itself into all market purchases, or it has, and what you're seeing is some slight selling within it, which is why we noted some of the increases in the NBI White. Now you look at it from Treasury standpoint, again, nothing, because there just isn't any real indication they're going to do much of anything beyond what they did. They kind of took the political heat off of things, but doesn't mean they're going to continue unless that ramps up again. From an oil standpoint, you're not looking at an inflationary situation, but you're also not looking at easing things off, uh, simply because you're not breaking the lows. Well, that's the only way you're going to get a driver of uh, energy supported investment. Is literally what it is. You're not spending the money on energy; you have it for investing into your business. It's the same drain that takes place with U.S. deficits and the amount of money that they borrow. If that money wasn't being borrowed by the Treasury and given to treasuries, and that, where would it go? Well, you would put it into investments that are going to yield a return, which is usually business. Now the recognition that the Eurozone is really very close to, you know, individual implosion within the broader implosion of the greater whole. Think of it as you have half a dozen of your states completely bankrupt, and then the rest of them were feeding it. And now the ones that were feeding it are starting to fail as well. And we see this in France and Germany and the political turmoil that's taking place there. Even if you separate England from it, you can see the problems they have as well. So. That any of the European currencies are doing as well as they are is still a surprise, and mostly get all related to the political narrative of thinking that the U.S. is falling apart. And there's your gold, getting parabolic, and yeah, that's a lot of positive extremes. And if things were to ease off, and you ended with this idea that inflation wasn't a thing, and you had a budget under control, and that's an interesting one. I mean, how big of cuts do they make? And really would be an interesting test. And I don't know that anyone's willing to do it, but to take the cuts that are, available within, this shutdown situation, and really magnify that as codifying in spending, you could end up with a far reduced deficit, or even get close to neutralizing. Now, I understand Trump's belief that you could grow out of it, and that's only true if you saw oil prices plummeting to super cheap energy. It's not happening, so that theory is limited. And we also know the direct correlation between the amount of borrowing and reduced GDP over time. These are all well documented. It's no one's surprise. So, gold, does it still have continuing room? Absolutely, because if you're a bank, why would you even think about getting into treasuries when you can buy gold instead? It would make absolutely no sense. Which is why Treasury have been having some issues with some of the auctions because it doesn't make any sense to be in the Treasury at this particular stage. So, they may have hampered themselves in their own thing. Bitcoin fading back a little bit. It had a bunch of positive extremes from this move. Intraday it was really easy to see, but you can see the potential all the way down to 115 on that for filling all of them. MBI White led before, but just about to have a crossover here of the magenta on a daily, so that would be interesting below yellow, and that would be a bit more weakness, but within a soft MDI white, that would just cause you to be towards that 117.9 50% marker. Similar from the ETH, didn't suffer quite as much, but the reading is far worse. This suggests that if you did reach the 50%, which you should, you would actually break below it if that maintained itself. So we'll keep an eye on that one. We knew that from the early spike that we had going on, it was pretty darn close to positive extreme. It's a very interesting one because you came from a dip below the red line, which usually means you have to retest it. It's kind of the equivalent to the positive extreme, but more an expanded view. And sure enough, we filled that, but at the point of filling it, you ended up with MBI white leading with magenta under. Well, that calls for a zero. Very straightforward. And boom, all the way to zero. The zero happened to be rising, so that helped a little bit, but still came right to it and supported right off of that. Continued to have MBI white leading, but you ended up with magenta over. That gave you the stabilization. And then it was just a question of who was going to get to the 25 first, and that turned out to be the magenta. Magenta gets there at the 23%, and that's where you have your breakout short cover rally taking place within that. And this is what happens. The shorts get a little exuberant because they think things are starting to fall apart because they should. And, it's always the short mode. And the bulls are able to just flip the script on them and cause that short cover rally. And sure enough, that's what we're seeing right now. You're going to have to see a bend in the MBI white before magenta at this 50. Otherwise, that's going to be resistant. So easy, clean read from a 5-minute chart there. You can see how just clean from the open. It was all selling puts were doing it, wiped out all of the calls, and then later on they start to take away the gamma from the puts that all jumped in there late and pretty much neutralized them from that point. And so when we open up from a European session, if this maintains itself, then you'll pretty much wipe out all the puts that were bought in between. All your option dealers will be very happy and continue to smile as everything's neutralized. So long and the short of it for now. And so, if there's anything relevant, I'll put it on our team chat. Have a good one. Trade well.